from crypto to capital markets, Europe's digital wealth transformation. Now stick around. This one's with Lukas Enzersdorfer-Konrad, CEO of Bitpanda. Please put your hands together. Welcome Lukas to the stage. And stick around for this one, guys. This one's going to get really good. Well, I suppose we all just need to decompress after Justin's video there. There was a lot in that one. And yeah, did you enjoy Justin's video yourself?
Sure, always.
Yeah, it is good, honestly. Now, let's actually bring it back to Europe, okay? So Justin spoke a lot about like the global situation there. And now Bitpanda started in 2014. And if you look back over the industry over the last, say, 5 years versus today, from a retail perspective, how do people in Europe view digital wealth, holding digital assets, maybe borrowing against them? What's the current sentiment, particularly amongst retail?
Sure. I think we started in Europe at a similar time as also from a global level when it came to crypto. But there is quite some difference, right? When it comes to Europe, it's regulation. Normally, regulation in Europe is hindering innovation. With crypto and MiCA, the European crypto framework, this is different, right? It accelerates innovation. Why? It accelerates adoption of crypto assets. And I think we've seen that really strongly, that European society on the retail side was catching up on crypto ownership and crypto investment, especially over the last 2.5 years, to get near to US levels, at least across the European continent. For sure, this depends market by market, country by country, because Europe is not one country, it's more than 45 different ones, but that actually it is.
Okay, so I suppose from a retail level, let's look at, there's lots of the incumbents of traditional finance here. I suppose there's a real strong sentiment amongst TradFi for all things coming out of the innovations from the crypto space. In Europe particular, has MiCA helped push them more towards the table? And how are they making kind of industry deals and industry connections with the insurgents from the digital asset space, like yourselves, in Europe?
Sure. I think banks and financial institutions needed to neglect very long and ignore crypto assets as an asset class and blockchain-based assets, meaning tokenized assets in general, right? However, MiCA and the regulatory frameworks nowadays finally enable them to adopt it, and we've seen it now at larger scale. We see that today here at the conference. We see that the whole week and also over the last probably 1.5 to 2 years. And we as Bitpanda see it especially because Bitpanda Enterprise, it's our B2B business where we enable banks, fintechs and others to exactly do that, offer crypto to their end customers. This can be retail, but also this can be corporates and SMEs.
Okay, if you look at MiCA and how it compares to other jurisdictions around the globe, could you just talk a little bit about potentially the advantages, especially for your business model, and I suppose the traditional finance incumbents in different countries around Europe? What are the advantages first of that? And then possibly we could even go into the challenges that MiCA has compared to other jurisdictions.
Sure. So just that everybody understands, Bitpanda is the leading European crypto company. We have more than 7.5 million retail customers across Europe on our B2C platform, and our B2B business is more than 30 million customers connected to exactly enable that via our bank partners to invest into crypto. And that's only possible because MiCA has three main advantages. It's a clear regulatory framework for all regulated institutions across the European Union, and is portable, so one license to rule them all. The second one actually, and I think that's quite clear, MiCA comprises not just trading, buying and selling of crypto assets, but also interacting with blockchain technology and the main aspects of it. And the third one, and I think this is also when it comes then to the challenge, it's not regulating the whole space. Meaning DeFi, for example, is not included. Stablecoins are to a certain degree. So it's for sure just the first step of a much longer way we see when it comes, or like a longer road down when it comes to regulation in Europe, which I think just started. However, it's not the end. But it's something good because I think the pace of innovation which we all as an industry are doing also requires like ongoing iteration of regulation.
Yeah. You talked about this journey, and do you think we're at the start of this journey, the middle of the journey, or close to the end? Because you mentioned the challenges of regulating DeFi. Okay, so MiCA doesn't include DeFi regulation yet. I've spoken to lots of different regulators over the years about how they could actually, embrace that challenge. Talk to us a little bit about where we are when it comes to actually getting an all-encompassing regulatory system for all the innovations from the crypto space.
Sure. So I think when we think about regulation, everyone who has seen the financial crisis and the aftermath in Europe, meaning 15 years of banking regulation coming, we are definitely at this start. That doesn't mean that we will get the regulator over the next 15 years. Probably it's faster, but definitely there won't be just the second iteration. There will be a lot. And we already see it now with level 2 RTS and the detailing of the existing regulation. However, it's something positive. Why? Because it gives clarity. And when we, as a crypto industry, but also we as a digital asset industry, and in the end we, as the financial service industry of Europe, think about how can we take crypto, but also other types of digital assets, stable coins, payments, tokenized assets, and everything which we now put on a blockchain, really make mass market compatible. And it's not just retail, this is especially institutional. Then it is necessary and possible to actually really go down that road, and regulation is needed. So I'm actually a huge fan of that there becomes more regulation, if it makes sense, and that is on us to be there quite involved to actually get that done.
Thank you, Lucas. I suppose maybe people want to know in the audience, when you go to the different incumbents from traditional finance that you talk to, and they maybe want to integrate some of the solutions that Bitpanda has, what are the major things that they're looking for from Bitpanda? I suppose, there's risks involved. You have to communicate certain things with them, but for other businesses out there, I suppose, not to give away too many of your trade secrets, but can you just give us a little bit about that kind of communication, about what they want from you, but how you communicate the solutions that you solve, basically, for them?
Sure, I think it's much more, or much less about Bitpanda, but much more about, just think about any financial institutions as of today in Europe. They needed to neglect for more than 10 years crypto, because it was regulatory-wise not possible to do that. Second, they don't have the know-how internally most of the time. They don't have the technology because they did not invest into it and did not build it up. And third, and I think that is for most the point is, now suddenly everything is on the move and everyone is on the move, so they have quite some pressure. So getting into digital assets is, and I think we've seen it now in Europe with stablecoin initiatives and consortiums being founded and established, with banks going into offering crypto, either for their retail customers or corporates. So there is a certain degree of need and pressure actually from a time to market perspective, and you can only make that happen in that way if you partner up with someone. It's because it's not just about, oh, I need a custody solution, what is the best vendor for custody? It's much more about how can I get the know-how built up internally to long-term operate that asset class and that future technology actually of capital market infrastructure and the capital markets, and that is the crucial point.
I suppose looking at Europe and the appetite for these solutions in Europe, how does it compare to, say, Latin America or the UAE or other areas around the globe? And could you sort of break it down into what are different regional jurisdictions looking for? Are they looking for more clarity or more solutions when it comes to stablecoins or tokenization or a plethora of other different things? Would it be stablecoins is the major thing at the moment?
So I think, first of all, you need to look on countries and markets where they stand from a maturity perspective. And what we've seen is that every market, every country, once regulation comes in, accelerates in maturing and adopting actually. We've seen that in Europe with MiCA, we've seen it in the UAE with the digital asset frameworks of Dubai with VARA and the ADGM actually in Abu Dhabi, that suddenly banks and financial institutions are adopting there and start to offer crypto. One good example is the National Bank of Ras Al Khaimah, RAK Bank, which actually is offering crypto since last year, September, also in partnership with Bitpanda. And we currently see that in Brazil, where since February this year, also regulatory clarity is here, and banks as well as all crypto companies need to apply for crypto licenses until the end of the year to obtain that, which also suddenly makes more and more local banks to go into that. And I think that is much more relevant, despite just the use case you then build, which can be crypto trading, which can be stablecoin payments, which can be remittance, which can be any type of tokenized bond issuing, for example.
So when you guys started out in 2014, okay, so you're over a decade in this game. What kind of experience have you learned? What is the major the mistakes or the pitfalls that you have avoided? Is it basically by building up relationships with regulatory bodies and actually making sure that you are following and learning from the compliance regulations as you go through?
Sure. I think what we have done, and probably what every crypto company needs to do, or every company being fully regulated, is building up regulatory know-how and compliance knowledge, right? Why? Because you need to be an expert if you want to operate in a fully regulated way, and even more if the technology you operate and the use cases are completely new. So therefore, for us, it was crucial and highly important to have not just more than 100 compliance and risk people within our organization for the sake of having them, but much more to really have them as a backbone of what we do and how we do that. Why? Because also the counterparts in banks actually are the compliance departments, the risk departments, the AFC departments, who probably not always have the best understanding in the beginning about how blockchain works, what the tokens really can, what smart contracts are in detail. So building up understanding and know-how on the other side is crucial as part of any of these projects.
Yeah, it must be difficult, walking into a bank or a regulatory body and hitting them with a whole avalanche of jargon, L2, L1, permissioned, permissionless, blockchain this, So what kind of ways do you sort of build in without maybe scaring them off with a ton of jargon and sounding like you want to have a communication with them, but you also don't want to kind of like come across as being, oh, I'm the technical guy here. You don't want to come across as patronizing. So, can you give us even some anecdotes that you've had about your communication with those kind of bodies?
Absolutely. Like one great example was a story with very large German bank, where we were starting in the beginning a lot of discussions. This was probably 1.5 years ago in regards of how can they go into and establish digital asset custody actually for them, and how does that work. And they were all coming from, we just need to get some software, and then these private keys, and these are like passwords, and we need to store them, and starting to explain to them the complexity of how to secure crypto funds actually, and explain it to them that this is much more like gold, like storing gold in physical vaults in like 100 years ago, for example, than storing some digital password in a password manager and secure it that way. That was one of the points, and there it's highly important to speak the same language, right? If you just come there and not just throw around a lot of technical terms, but much more understand how banks and financial markets work as of today, and find the right analogy to how equities brokerage, for example, is operated, and how you do equities custody and clearing and settlement as of today, and how this will stay process-wise potentially the same or legally, but just technology-wise from an operational perspective will be different. I think that is actually that crucial key to ensure that understanding on both sides can be created.
Yeah, I suppose as you go along, you build up a handful of handy analogies and metaphors that they can have terms of reference and stuff like that. So do you feel at this moment in time, when you're talking to traditional finance or regulatory bodies, you're not getting as much pushback as there was, say, a decade ago? And is there a little bit of FOMO amongst TradFi at the moment to try and
100%. My analogy always is, like, banks always work very similar from a thinking. They all sit in certain glass towers, right? So it doesn't matter if it's in London, here in Paris, in Frankfurt, in Germany. And then one bank starts an initiative and says, we now do either crypto or digital assets or stable coins. And then the other 3 glass towers are looking over to the other glass tower and say, okay, and how are they doing that? And is my regulator allowing that? And as soon as the regulator has allowed it and they're live with it, then suddenly also the fear of missing out to a certain degree starts. And I think we still have not always the broadest understanding on a management level in most of the European financial institutions, but this actually accelerates nowadays a lot. We are interacting a lot with CEOs and C-levels across all these banks, and I think this is where suddenly an interest, which probably a year ago was not there, suddenly is there and generated, and that's crucial.
Speaking to a former economist, he's actually former finance minister of the UK, and he said, really, our game is just kind of like hold back, see what MiCA does, see what happens in the Clarity Act, see what happens with the Genius Act in the US, and then potentially make a framework that's potentially more competitive than the rest. Do you think that Europe acted too fast with MiCA?
No, not at all. Because otherwise we would not have nowadays these discussions, which also accelerated in other countries and areas. You can look on how the UAE has been regulated. A lot of MiCA is actually also in there. How now Brazil, how, as you said, the UK actually, and the upcoming regulation is looking like. So no, not.
Yeah, yeah, I know what you mean. Because sometimes people have made the argument that make it kind of lock the system in a certain guardrails that didn't allow it to have sort of wriggle room to be more creative. What's your viewpoint? Do you think it's too restrictive, or do you think it's the type of clarity and the type of foundation that allows people to be creative?
We need to understand that financial regulation exists for a couple of reasons, right? Consumer protection, market protection, and financial stability protection. And therefore, there need to be guardrails which are clear and are supporting these three goals. That is not always catering innovation from an on-chain DeFi perspective, but it definitely caters the goals of the regulation. And I think the Amica is very, very clear.
Okay, what's the biggest thing that we need to get right here in terms of regulation, in terms of building the financial rails of the future? Is it to handle this tsunami of AI bots, anonymous bots, agentic payments? Do you see that is the big thing that blockchain will be able to catch and will be able to potentially make it more secure?
So 100%, like agent or agentic payments is probably like a huge thing. I always remember the time, it was probably 10 to 15 years ago, when the Internet of Things was suddenly a huge thing, right? And sensors were all over the place and everybody was asking, how will my fridge order milk if my milk is gone, for example, right? Because everybody thought, oh, now we can measure if the milk bottle is empty, so my fridge can actually order it. But the IT systems, AI-based, were not there, and also the payment system actually does not exist, still not as of today. And I think the blockchain technology and payments exactly will be the main layer of enabling such use cases that we're really in an agentic AI-driven world that even fridges can order milk for you.
Yeah, whenever we look at these buzzwords like tokenization, even the word crypto, do you think that in a few years' time, this will just be, you won't talk about tokenized equities, you'll just talk about equities and they will be tokenized anyway? Do you think that's where we're moving and we can get rid of all the jargon and then all of the stuff that we kind of from legacy systems will basically work on these new financial rails? Do you think that's the way we're going at the moment?
Exactly. I mean, nowadays we speak about digital assets, and in the future we will just speak about assets again, because everything will be digital, meaning will be on-chain as a token. And I think the tricky part currently is this transition phase. Why? If you think about taking something which legally already exists as of today, and you bring that on a blockchain, it's a different technical wrapper, right? It's only a token, which represents the underlying or stock, a bond, something, but should not change the legal wrapper. Because if you make out of a stock a derivative, it suddenly is different, right? It has counterparty risk, it has other things associated with it from a risk perspective, probably from a taxation perspective across, depending on the country where you live. So the big, I would say, stretch nowadays is to get tokenization up and running, but in a way that only the technical wrapper gets changed, but not the legal wrapper, actually. And therefore we need the institutions, the exchanges, the clearing houses, to really make that happen. And I think we nowadays see that over the last couple of weeks that also the exchanges are moving into that way.
Yeah, I think it's good that you brought up the legal situation because obviously in different jurisdictions around the globe, the legal environment has developed over hundreds of years, and that gives legal ownership to, say, land deeds or to, say, equity and stuff like that. What do you think are the major challenges to try and join up all the innovations that's happening with interoperability of tokenization in this new innovative era with these old legacy systems that don't move as fast? Like, they literally move extremely slow. Like, you buy a house, you know how slow that is about going through different solicitors. How are we going to speed that up? I know the UAE is kind of like progressing there, but can you give us other examples other than the UAE?
I think that's currently the tricky part, right? You need to start now with the real plumbing of a whole industry, which is there since not 5 years, 10 years. It's like 30, 40, 50 years of technical system, especially when you think about capital market infrastructure. Because, I mean, you had the example of housing, probably that is even much farther down the road, because in certain developed markets, like in Europe, in certain countries, that it works quite well in existing systems. Yeah. But what we will see is that capital market infrastructure not just will change, but already is changing. However, it is not changing the way that you just replace existing infrastructure by getting new stuff in. It will be built on the side of it, and I think we will live quite long in a hybrid world, where tokenization is or we will transition into tokenization, and actually then can handle all these tokens on top of that, while you still have the old world until this is gone. Why? because the complexity is huge, especially in the institutional space. The amount of assets and varieties of it are really, really complex. That will take time.
Yeah, I think the legal area of different jurisdictions around the world will be one of those situations where there has to be, you've done your regulatory bit, you've nearly got those guys convinced, then you'll have to go into the legal and the political and the legislation and all that sort of stuff in different places around the globe. But when all that's done, there'll be a new world. Okay, please put your hands together for Lukas. That was great. Thank you very much.
Thank you very much.
Welcome to Signal Week.